edition of the Global Fintech Fest kicks off today in Mumbai. So let's cut across to my colleague Ritu Singh. She's in conversation with IndusInd Bank's MD and CEO Rajiv Anand. To take it away.
Well, thank you so much, Sonal, for that. Yes, we're here at the Global Fintech Festival. But, you know, the newsmaker when we talk about finance for the year has been IndusInd Bank. And I have with me the man at its helm, Mr. Rajiv Anand, the MD and CEO of IndusInd Bank. Now, 40 days into the job, Mr. Anand, first observations taking charge as the CEO of this, what has been troubled waters.
I'm absolutely delighted, to have taken over IndusInd Bank. Yes, it's been a bit of a checkered past, but as my first impressions in the first 45 days is that the foundations of this bank are really, really strong, and I do believe that we can build a really strong bank that our customers, our regulators, our promoters, investors will really be proud of.
So what will be the priorities as you look to regain investor confidence, rebuild the bank? Some of the challenges that you've identified and the opportunities that you'll be working on.
In a sense, 4 key priorities. One, like rightly said, build the trust back with regulators, with investors, with depositors, and most important, our employees as well. 2 is get the business momentum back. I think it's a bit slow at this point in time. We put out our balance sheet numbers a couple of days ago. 3 is, start to build a profitable franchise, which is a lot more balanced, both on the liabilities and asset side. And finally, we are here at the Global Fintech Fest. I think there is so much of work that we can potentially do to unlock productivity, for the bank. And I'm, in a sense, here to learn of what we can use, from the Global Fintech Fest in IndusInd Bank.
Well, speaking about the business momentum and the numbers you've just disclosed, this is a stark contrast to almost all other bank updates that we've seen where there's been a decline of 8% in advances and a 5% decline in deposit growth. When do you think this could meaningfully turn around given what the bank is going through?
I think obviously we're in silent period at this point in time. The results are expected on the 18th. Yeah. But I think it is progress, that we will need to make. One of the things that we are currently working on is to rebuild the team. You've seen that we've got a new CFO, we've got a new legal head, we've got a new marketing head, a new internal audit head, and so on and so forth. And you will see more people, come in between, let's say, now and 31st March. And so therefore, as the team begins to build, it's really a bunch of individuals who will come together to be able to transform this bank. And over a 3-year period, I do believe that IndusInd Bank will be able to regain its preeminent status within the banking industry.
So you think it'll take 3 years to to regain the lost ground, given the lapses?
Ritu, I think it's a matter of process. I think I don't want to overpromise at this point in time that everything will turn, but it is going to be in stage 1. It's really to be able to rebuild the bank, get back business momentum. Year 2 is to gain market share, and year 3 will be about domination. So I'm not saying that one will have to wait for 3 years, but I think it's going to be a gradual process that perhaps I do believe that we will be a substantially better bank certainly in 3 years' time.
Well, in 3 years you're talking about gaining domination. So is it safe to say within 2 years it'll be back to what we saw of IndusInd Bank before these lapses came to light? At least at that run rate of growth, that kind of profitability.
Still early days, Ritu, and I promise to have a more detailed conversation with you in the months to come. I mean, like you rightly said, it's just 45 days that I've been within the bank, and so therefore I do promise you a longer conversation on our strategy, our growth aspirations, and what we aim to achieve in the months to come.
And we appreciate you first speaking to CNBC-TV18.
I'm delighted to be here.
Well, but speaking of rebuilding the top team, there have been a spate of appointments that you spoke about, internal audit, a new CFO and so on. What next, in this process, if you sort of rebuilding the bank after the series of lapses that had come to light, what are the new appointments we should look forward to, and what would you want to guide the investors in terms of the rebuilding process itself?
So I think there are some senior team retirements that are coming up over the next 6 months or so. So we will have to sort of replace those.
Okay.
And you will hear about some of those. Currently many of these conversations are on with me at this point in time, and you will hear about that in the months to come.
Okay, we'll wait to hear more on that. Coming back to the business momentum, given that there's been a decline in this quarter, with the GST cuts that have come in the initial phase of September, for instance, have you started to see any kind of uptick? Will there be a meaningful revision to whatever you're expecting the credit growth for the year to be, thanks to these cuts?
I think there are 3-4 things that have happened, right? I mean, liquidity is much easier. There is transmission of rates that is playing out. The tax cuts that are now percolating into the system, and finally, of course, GST. And so, therefore, I do believe that, and newspaper headlines are saying that as well, that we are certainly seeing demand is much better at this point in time. Some of it is pent up. But I do believe that the second half of the year will be significantly better than the first half of the year, and that should, by definition, then convert into better loan growth, particularly on the retail side. Better transaction flows on our credit card business, and so on and so forth.
In terms of the pockets of stress because of the tariff-linked, tariff-exposed sectors, what is the total exposure of the bank to these sectors that might get affected? And are you already starting to build in those provisions, or are you seeing some sort of a turnaround also in sectors like MFI, MSME, which had been seeing a period of stress before?
So we've done some work around this, particularly around our gems and jewelry business.
Yeah.
We are quite comfortable in terms of the exposures that we are currently carrying. It is to better rated corporates, within, or the market leaders, within that space. Secondly, on MFI, I think the general commentary is that the second half of the year will certainly be much better than where we are today, and that should play positively for us. We have a very large commercial vehicle business, and I think the GST cuts should play positively for that business as well.
So again, to close this loop on IndusInd Bank 2.0, what will be the key growth engines from here on? I mean, and how do you get back to being among the, say, top 3, top 4 banks? I mean, what is the pathway, glide path to that?
So I think one is there is work that we need to do on the liability side, such that we are able to bring our cost of deposits down.
Yeah.
2 is on the asset side. We need to broad base our offerings to our customers, which will in a sense play to the liability franchise as well. And 3 is continue to strengthen on our some of the key businesses or domains that we have always been strong on: commercial vehicle, gems and jewelries, and microfinance.
On the corporate side, especially given the spate of reforms, regulation reforms we've seen from the Reserve Bank of India, how much additional headroom do you think there is for credit getting unlocked, especially when it comes to capital market financing and M&A financing?
I think some of the things that the RBI has done this time is seminal in that sense. Many of these things are things that the banks have been asking for, particularly M&A financing, and I think that is and what RBI has put out there is truly transformational. And I think, but at the same time, it addresses the supply side. But I think I still worry about the amount of demand that we will have for credit, particularly from the corporate side, because they continue to be delevered, they continue to generate strong cash flows, and they have access to equity markets. And we're currently seeing 2 large IPOs in the market as we speak. And so therefore, to that extent, their requirement from the banking sector at this point is expected to be relatively muted. One will have to watch out whether some of that ECB demand, etc., moves from ECBs onto local balance sheets, but still early days.
But overall, you think, the tone of these reforms and this regulation overhaul that we've seen from RBI, 22 announcements in one policy, what is that indicative to you of? I mean, is this that the banking system is mature, and so, some of these tight guardrails that the RBI had built around these systems can be let loose? Or are you worried, it could lead to some risk build-up as well if, a lot of it is left to the bank's discretion as well?
I think it clearly shows RBI's intent of unlocking the potential for the banking industry. And many of these reforms are really going to help in terms of ease of doing business, our ability to help work with our clients in a much better manner. And so therefore, I think it just signals intent of the regulator to make banking simple in this country.
But you think corporate growth, which has been stalled because of the reasons you outlined as well, that could get a meaningful uptick, especially with this large corporate total exposure cap, etc., getting revised or being scrapped altogether, rather?
Ritu, I think those are enablers.
Yeah.
I think one has to see the demand side.
Yeah,
it just goes back to your previous question on demand.
Yeah.
I think if consumption starts to grow, I think it's a matter of time before private capex begins to kick in, and then once that starts to happen, I'm sure there will be demand from from corporates, both on the working capital side as well as for term loans.
Even on the ECL front, the expected credit loss adoption, which has been talked about for many years now, RBI is talking about 2027 and another 5 years glide path for banks to adopt that. That gives you plenty of time to absorb any sort of additional provisioning that may have.
If one talks about, I think if you look at the banking industry, various banks are at various stages of evolution as far as ECL is concerned. I think some of the larger private banks are, much closer to adoption, while some of the other banks may be. And so, therefore, to that extent, the fact that RBI has put out a roadmap, a glide path for this, just first and foremost, it takes the uncertainty out of. We've been talking about when ECL is going to come for the last 4 or 5 years. So at least to that extent, that is now out. And I think you will see various banks. There will be early adopters, and there will be banks who will use the the full 4 years.
Speaking of capital, there is a board approval in place now for you to raise capital. How soon before we see IndusInd Bank, raising equity, and to what? Just take us through the timelines and the deployment of that for various purposes.
So, Ritu, the resolution is just an enabling resolution. So, but if you look at the numbers from a capital adequacy perspective, we are well above 16%. CET1 is well above 15%. So, at this point in time, IndusInd Bank doesn't require capital.
So, you might not be raising that capital at all.
I don't see us raising capital, at least in the short term.
Oh, okay. That's a surprise. Finally, to close, what is the next big thing to watch out for from IndusInd Bank in 2026 as you steady the ship and you rebuild the bank? What is the one big theme to watch out for?
I think it's the rebuilding of trust. Like I mentioned to you, everything that we do has to ensure that we once again become the trusted partner. And a partner that our customers will repose faith on. The regulators are comfortable with our business model and the ethical standards that we are working with. Investors get comfortable in terms of disclosures, and the media is once again more favorably disposed towards IndusInd Bank.
Well, and we wish you the best with that, Mr. Rajiv Anand.
Thank you so much.
Thank you so much for your comments. It's been a pleasure speaking with you.
Thank you so much, Ritu.
Thank you.